What is up, everyone? Welcome back. In this video, we are going over ticker AMD Advanced Micro Devices, and I'm going to explain to you what the chart, why I expect a bigger correction incoming soon, guys. Remember, none of this is financial advice. This is just technical chart analysis. Okay, here we are, AMD, guys. Big tech stock, $360 billion market cap. And this video is particularly important to people who might have bought in the higher price ranges, guys, or if you bought in the lower price ranges and you're looking to take some profit. But obviously, AMD is in a very strong uptrend, and you can see that clearly here in the weekly chart. So the market currently is at a bit of a decision area right now, guys, and it's looking to fight this bearish sentiment that I believe has already started. If you haven't seen my update on the market, check this out for more details and full chart breakdown so you get a better understanding of what might happen in the near future in the market. So these big tech stocks, everybody knows they have the potential to be slow moving and not ripping as hard as the lower cap stocks. But guys, in the right market sentiment, that is very possible. You could see, we have these touches on the bottom of the trend channel, and the last couple moves, we ripped 267%. And after this mini crash last year in April of 2025, we ripped almost 250% in under a year, guys. 200 days. That's very, very good and very strong for a large cap stock like this. And you can see we're trading in this uptrend channel here, this macro trend channel, and we ripped above it, gapped up above it. And just as we can rip to the upside, guys, I'm going to turn the indicators off real quick. The same goes for the downside, guys. And this is going to play an important part later. You could see the last time we touched this peak here, we ripped down 66%. Next peak here, exactly 66% again, guys. Coincidence, do your own due diligence, but that will come into play later, and we'll see what happens next. For those of you who are not familiar with my content and want to learn how to become a better trader, check my Patreon out at patreon.com/GainsKeeper Trading. We have a premium vault of tutorials that'll take you from a beginner to advanced, and even if you are advanced, you will still learn something there, guys. Trading systems, low to large cap, swing trades, and weekly setups. And once per week, we go beyond the charts to focus on personal awareness and personal growth and apply that to the trading world as well. This is all included in my highest tier, the Master Keeper, guys. So once again, feel free to subscribe on YouTube, but my premium content is on patreon.com/GainsKeeper Trading. We're back on the chart, guys. I'm going to throw the indicators on, check the RSI. So you could see last time, we're in the weekly chart still, guys. You can see last time we had this downtrend. This RSI was getting compressed, and then we broke out of it. And a lot of these big tech stocks and stocks in general, they trade in similar patterns and similar trends. And I think we might be forming another one of those here, guys. You could see the RSI looks like it's getting compressed the same way. And what's interesting to me is that when I do this for several of the other big tech stocks, a lot of the patterns are ending, around the same time in July and August. So it's not a coincidence, guys. Do your own due diligence. But back to the chart here, you could see we have these weekly gaps. And what we know about weekly gaps is that they tend to get closed, especially in these big large cap stocks. Now we're going to go over prices to the upside and the downside, guys, in the daily chart. And I'll throw the drawings on and we'll get right to it. Okay, so what happened here? After this rip, guys, we gapped up above the trend channel, came up, came back down, formed a double top pattern, guys. It's a pretty on the dot double top pattern, guys. And for you guys who don't know, double top patterns are very bearish. Basically, the buyers tried to break the price higher again, and you could see we had higher volume here, and we lost a lot of that volume here, guys. Not enough volume, and then that usually is bearish. And you could see we came back down, found support on the EMA 200, and now we are ripping to the upside a little more here, but we gapped up again. So the question remains, what do I think is going to happen next, guys? Let me turn the indicators off real quick. So like I said before, the market is in a decision mode right here. If we do see, it is oversold though, so I think we might see a little rally. And if we do, we're well on our way to closing this gap here, guys. We have a I'll do this Fibonacci retracement. You see this little golden zone here that I mapped out. So that's an imbalance that needs to be retested. That happens to be right where the gap is, guys. So it would make sense for me to at least touch these two areas here. So the gap's at 237. It's a daily gap, and maybe retest this golden pocket here. If the rally continues, our main supply zone where we would get rejected or potentially get rejected is from 253.25 to 267.01. And even higher than that, this could be a future price goal after another downtrend or now. This is based on a reverse Fibonacci retracement I did from a prior move. 306.22 would be a next price goal, guys. More important for me and whoever may be invested in this stock currently is prices to the downside, guys. So as I said before, double top patterns are very bearish, guys. And there's a general rule of thumb for double top patterns and triple top patterns that you could see I have this neckline support here. That's the neck where the in between the double top where it finds support. You can see multiple touch points here. That percentage is like, let's call it roughly 33, 34%. Usually, typically, the stock comes below that 33 to 34%. So 34% would be right in our decision reaction zone at 121.64 to 133.58. And you could see, if I put the indicators on, we have multiple gaps here. These are daily gaps, so they won't show them here, but we have this weekly gap. Let me turn these off again. And the 200-day moving average is waiting right here as well. So you could see this decision reaction zone and this response line. Sorry, guys. You could see we touch this zone here is very supportive or rejective, depending on where the stock is coming from. From the bottom, it could support. From the bottom, it could provide resistance, guys. So remember, I was talking to you about the 66%, how we lost 66% here. So that's from the last peak. Now we have our double top peak here. And let's go 66% down, guys. Right there. So it was right here, guys, right around this area. So let me get it back up there for you guys. My apologies. I'm a little off today. So right here, guys, right in our primary demand zone or the bottom of the trend channel. So that would only make sense if it came back all the way back down to this primary demand zone. And when I say primary demand zone, that's where the big boys usually step in. You can see we had a little shakeout here on that crash last year. And so these two zones are very likely for me for the stock to come back down. I know it's a large area, but you have to do your chart analysis at that time. See, you got the weekly 200. We might dip below, come back up, but we might make it all the way back down to the trend channel, guys, and respond again. You could see every time we touch the bottom of the trend channel, we have very bullish responses. But it depends on when the pattern runs out, depends on the market sentiment that time. We have this weekly gap here. That's likely to get closed. It's not a long time ago, guys. It's from May of last year, not even a year ago. So weekly gaps, there's a weekly gap all the way down here somewhere. I do not expect this one to get closed, guys. This is from however long ago. The chart structure changes over time, but this weekly gap is definitely in play for it to be closed. So maybe we close this weekly gap, maybe not go fully 66%, guys, but we get there, hit this demand zone 93.12 to 104.46, and that's when the pattern ends here, and that's when we respond up to the upside, guys. And that doesn't mean we have a straight line from the bottom, guys. That, like, say we do close this gap, we could be losing 45% to 50, 60% from this gap. Current price would be a little less than that. That doesn't mean it's a straight line down, guys. You see we have Ichimoku's cloud support here, this bottom right on the weekly gap. We could come down and respond, get rejected by the trend channel, and have some bear steps. It's not going to come all the way straight down. You could see similar here, guys. You know what I'm talking about. You see how we come down. Keep an eye on the lower highs. That's very important in trends and your divergences, guys. Hope this update was helpful. Have a good trading week. Keep an eye on these two zones here, very important zones, but we won't be there for a little bit. But, once we close this gap and retest this, maybe a little higher, maybe we form a triple top. I think that would be it for advanced micro devices if the bearish market continues, guys. All right, keep an eye on that. Have a good day and good luck trading.